Hello, this video is opening up a new business English series, and we're also learning some very basic business English vocabulary. So you decided to be a businessman or a businesswoman, and you need to start a business, or you can also say set up, found, or establish a business, company, or a firm. And if the company is real big, you can call it an enterprise. So you can say, for example, they set up, established, founded, or started an IT company. And first of all, you need to choose the form of your business organization. What kind of business entity you want to set up? There are companies with unlimited liability and limited liability. Unlimited liability refers to business obligations of sole proprietors and business partners who are personally liable for all business debts and have to use their personal funds to cover them. On the contrary, limited liability is the condition by which business owners are legally responsible for the business debts only to the extent of the money invested in the business. In other words, personal funds are not at risk in this case. And the examples of limited liability companies are private limited companies, as they are called in the UK, or LTD for short. In the USA, they are called limited liability companies, or LLC for short. The shares of these companies are not sold openly on the market, and in the USA, they are called unlisted companies. But there are also public limited companies, or PLCs as they are called in the UK, or listed limited liability companies in the USA, the shares of which are openly sold on the market. There are certain legal documents a new company must have, and the first one is called Articles of Association, or in the USA it's called Bylaws or Articles of Organization. This document outlines the rights and obligations of shareholders and managers, the relationships between different types of shareholders, and relationships between the shareholders and the company management. Another one is called the Memorandum of Association, or in the USA, the Certificate of Incorporation, which gives the company's name, the location of the company's office, the purpose of the company and its activities, and also defines the amount of the authorized share capital. Businesses can also be categorized according to their business activities and the industry that they are in. For example, in the resources and raw materials industry, there are oil and gas, coal mining, and gold mining companies. In the manufacturing industry, there are car making, clothes, and electronics producing companies. In the service industry, IT, training, and cleaning companies. And in distribution, there are food, pharmaceuticals, or electronics distribution companies. What are the roles of people in business? A person or people who establish a company are called founders. Those who own a company are owners or shareholders. People working in the company are the company's personnel or staff. There are also stakeholders, and I'll tell you who stakeholders are in the next slide. Stakeholders are any individual or group that can be affected by the company's performance. For example, shareholders, directors, managers and the employees of the company, customers and suppliers, government, and local communities. They all have their interest. For example, our clients are important stakeholders to our company. As an important stakeholder, local community should benefit from the project. Businesses recruit, hire, and employ people. That's why they're called employers. And people get a job, they're employed by companies or they join companies. And people working for a company or for a business are called employees. Employees may also be called workers, workforce, staff, or personnel. For example, we empower our workforce with effective incentive programs. I joined the company in 2015. They employ thousands of people all over the world. The goals of any company are pretty simple. First of all, the company should make profit. For example, the company made a lot of profit last year and they're going to pay dividends to the shareholders. Secondly, the company should maintain growth. For example, customer support is vital in maintaining the company's growth. And a company should also be a going concern. A going concern is an assumption that a company has resources to be operating for any foreseeable future, and it's one of the accounting principles. It is something like a proof that a company is not going to shut down. For example, they're selling their equipment and a warehouse to pay off debts. They may not be a going concern in a couple of months from now. Just a little bit of tax basics. There are different types of tax. Corporate tax or company tax is imposed on an income of a legal entity. A value-added tax or VAT is placed on a product whenever value is added at each stage of the supply chain, from production to the point of sale, and is often equivalent to sales tax. A social security tax is levied on both employers and employees to fund the national social security program, and an excise tax is imposed on specific goods or services such as fuel, tobacco, and alcohol. And a tariff is a tax imposed by one country on the goods and services imported from another one. Tax rate is the amount of tax. For example, income is taxed at the rate of, say, 13 or 35%. Business owners must complete tax returns and submit or file them on time. There are always legal ways to minimize tax burden, and it's called tax avoidance. But using illegal methods not to pay tax is called tax evasion, and it's considered to be a crime. And now some important financial vocabulary, but we'll be looking at that in more detail in another video. So, capital is financial assets needed to start a company, which can be borrowed, in this case this is the debt of the company, or own money of the shareholders, in this case it's equity. Revenue or turnover is money earned from providing services and selling goods. There are also costs or expenses and profit, also known as earnings. Profit is a financial gain, the difference between the amount earned and the amount spent in buying, operating, or producing something. Earnings before interest, tax, depreciation, and amortization are called EBITDA, and earnings before interest, tax, and depreciation are called EBIT. A company must pay dividends and tax. Retained earnings, also known as reinvested earnings, is the amount of net income left over for the business after it has paid out dividends to its shareholders. Some examples. The minimum share capital required to establish a limited company in Germany is €25,000. In order to cut costs, the company laid off a lot of employees. At the board meeting, they were deciding if to retain earnings or to distribute them at the end of the year. Important financial statements that a company needs to submit include a balance sheet, an income statement, also known as a profit and loss statement, and cash flow statement. We'll be talking about that in some other video later on. Sometimes to close a company is more difficult than to open it, and closing the company is also called dissolution of the company. So you can dissolve your company or wind it up, and doing so you must follow certain regulations. Dissolution of the company or its liquidation can be voluntary or compulsory in a situation when it can no longer be a going concern. In the process of companies closing, there might be some administrative and other costs involved, and the owners have to deal with a certain amount of debts and assets, which is sometimes quite difficult, and they need to get help from professionals called insolvency practitioners. This is all I wanted to tell you in this video about very basic business terms and business vocabulary. And if you found this video useful, please drop me a like, leave your comments, and subscribe to my channel. So, thank you for watching. Goodbye.